You get lots of words thrown at you every day: investments, recession, inflation, stocks, up or down, and hundreds more. But there are only two words you have to remember: die rich. Right here on this program, we show you, in good times and bad, how you and your family can have peace of mind. Yes, we help you create wealth and keep it for your loved ones. Today, we're going to talk with an expert about something you may not know exists that can bring you cash immediately. Yes, we're talking about one more way you can find out how to die rich and live rich. Let's go. Hello, I'm Howard Kay, and this is Die Rich. Our guest today is Bert Kroner. He is the President and Chief Executive Officer of Client First Settlement Funding, and he's going to tell you about another way to die rich and live rich. Bert, welcome to the show.
Thank you for having me.
I'm so glad you're here. You know, we've known each other for quite some time now, and in fact, outside, I was just saying, you know, you're just such an interesting man, because all the different facets of your life and the things that you've been through and have accomplished, and I said, it's really that your whole mission has always seemed to help people, and yet you've entered into an industry for some time now that truly is a method of helping people in a financial way. And of course, we're talking about the structured settlement industry. So maybe you can give us just a little history on what we're really talking about today, and then we're going to get into the actual program of what structured settlements are.
Okay, Howard, that sounds great. A structured settlement is actually a way of settling a lawsuit that probably started several years before the settlement was actually put in place. They actually come as a direct result, the vast majority of them, from automobile accidents. There's roughly 3 million automobile accidents a year in this country, and unfortunately a certain number of those people are injured, and they end up hiring a personal injury attorney, and there's a negotiation that takes place with the insurance company, and in the end these individuals are offered a lump sum of cash, and most of the time they're settled rather than a judge having a full-blown hearing.
So it's the two insurance companies, or the attorneys, I guess, representing those insurance companies that are creating the settlement for the victim, so to speak.
Well, the actual annuitants/plaintiffs are the actual party that's been offered either a couple of choices to make. One is, for example purposes, if they're offered $1 million because of their injuries, they can take the $1 million and they would pay their lawyers and whatever other expenses, and the rest they would just walk away from. But most personal injury lawyers today are not comfortable with people walking away, especially if they were injured, with that kind of money, and then find themselves penniless after a couple of years. So they recommend what's called a structured settlement. And what that is they take the money, the $1 million, for example purposes, and they bid it out in the annuity marketplace. The top insurance companies in the country.
So what you were saying is the insurance companies that are already selling annuities have a specific program in place,
yes,
for this business, so to speak.
Yes, there's a whole division for structured settlement annuity payment streams in all the major carriers that are A-rated, AA rated, and AAA rated. And so they're customized to the person's need, their age, their family size, to anticipate future financial requirements that are spread out over either normally a 20 to 30 year period of time. And so the attorneys are very much on board for each individual to accept these structured settlements, and it's turned into a $100 billion market nationwide, and every year $6 billion goes into creating additional new structured settlements.
That's based on the amount of judgments awarded. $6 billion
yes,
a year.
Yes, that's exactly right. Well, it's actually it's an underestimate because 1 out of 4 people take the structured settlement, and 3 out of 4 people take the lump sum. So the $6 billion represents only 25% of the actual total dollar amount that's actually settled on these cases.
So basically what we have here is somebody was in an accident. They were awarded a judgment in their favor of a monetary sum, and they were given a choice of taking that lump sum, but typically someone wiser, let's assume the attorney is wiser for the moment, but is going to make a recommendation that we want to make sure that this money lasts.
Correct.
For you. And that's when agents will go to an annuity agent, or I guess a structured settlement
broker
will go to an insurance company seeking out different options for them to take cash flow over time.
Exactly.
Okay. So, boy, you know, it's almost like a lottery in a sense that people get these payments over time.
That's also accurate. And later on in our discussion, we can talk about lotteries, because that's something else that Client First has a division that handles as well.
Okay, so now that we've got the basic understanding of really what a structured settlement is, it's a stream of income or of payments in replacement of that lump sum that they could have had.
Yes.
Before we continue with it, just give me a little history of how you got into this whole industry, because it's fascinating. You know, while you can sit there and help people really help achieve some of their goals and dreams, because they have now the wherewithal to do that with that money, how did this industry become what it is today, and what was the process to get it to where it's so streamlined today?
A lot of factors went into it. Initially, I came from a finance background and a sales background, and had honed my skills in transactions, putting transactions together. And for many years, I sold apartment buildings, and they were very intricate, complex transactions that revolved around a lot of legal documents and tax implications. And just like today, in the late 80s, early 90s, we're going through a very rough real estate market, and I decided to look for options on how I could use my skills, but in a different industry. And I ran across the discounted cash flow industry. And at first I did it with mortgages, and then I started a business doing it with lotteries that actually mushroomed from 4 people to 200 people in less than 5 years. And that was a great business. And halfway through it, I did get into the structured settlement business as well. So it was an evolution over time. And what made it such a safe business to be in, as you point out, the reason why people might want to sell their payment streams after a lawyer necessarily put in a very well thought out financial plan that you would think, why would anybody want to disturb that? And it's a legitimate question. But what happens is life sometimes throws surprises at people. Most of the time throws surprises
Absolutely.
at people. And all of a sudden, a couple that do not have children living in an apartment finds themselves with 1, 2, 3 children, and they need a down payment for a house. And if they were going to save up their monthly payments, it would take, the kids would be in high school by the time they'd be able to buy the house. So instead, they would come to a company like mine, and I would give them options on how they could raise $100,000 for a down payment. The best part about this transaction is people don't have to sell everything. If they're getting payments over 30 years, they can sell off just enough to accomplish their goals.
So let's say, for example, and I really want to direct this to and explain who it is we're talking about. Anybody that is presently receiving a cash flow from an annuity product from an insurance company, right now we're specifically talking about personal injury cases.
Right.
We're going to get into the private sector, the private annuities in a little bit, but talking directly to the people that have endured this type of situation. Let's say somebody is receiving $5,000 a month right now, and they may have, as you said, 30 years of receiving these payments. You're saying that they have an option to come to you to monetize any portion of that $5,000 a month. So in other words, if they want to sell the whole thing, you will make them an offer. If
Correct.
they say, I want to just sell you the first 10 years, so I have cash now and then I know I've got income down the road, that's an option.
Yes.
Or if they say, 20 years from now I want to sell, or now I want to sell the payments 20 years from now for the remaining 10 years and get a lump sum for that, that can be done as well.
Yes, every day that's the type of discussions we enter into with people. But what we do first, before we do that, is there's an application process, much like if you're going to go to a bank for a loan, where we have to first understand their overall financial picture, what other money they may have coming in other than the annuity. For instance, if a spouse is working. Or we may be talking about one annuity, but many times people get several annuities that are pieced together for various reasons because they go out further than one insurance company would be willing to go out. So a lot of people end up with multiple annuities. So we want to figure out between jobs and other sources of income that people may be getting, whether it be additional annuities or other investments or anything else. First of all, what's coming in? Then we're very interested in finding out what is going out on a daily basis, their expenses, their monthly or annual expenses, so we can figure out if they're underwater, breaking even, just getting by, or they have a surplus. We're not looking to hurt people. We're looking to put them in a healthier financial situation than they're currently in. So we're able to customize it based on each individual's financial situation.
So you may look at an overall picture where you could buy the entire stream of
Right.
income, but it may be your recommendation that that's not in your best interest. We only want to buy a particular amount because this will put you in a position of still having steady income, but having some cash up front.
Yes, and there's also another aspect to it, as well as wanting to help put the people in the best possible position. The statutes that govern the assignability of these payment streams, it's all done by court order. And 46 out of 50 states have these statutes. And it's a needs-driven transaction and a best interest hearing. And each judge has to be on board that this is going to be a benefit to the people, not a detriment to the people. And it would be impossible to get a court order approved by a judge if you go there with a situation that's going to hurt the former plaintiff, the current annuitant that's selling their payment streams. So we put a lot of effort into making sure it makes all the sense in the world so that we can get them the money so they can buy the house or get a car or pay off bills or pay for their children's education. We don't want them to be on a wild goose chase. We don't want to hurt them. We know the judge wouldn't approve it regardless. And so our goal is to put a lot of effort into understanding what would work the best for these people so that the judge will approve these transactions.
Well, I would assume based on that, you must have a very high success ratio as far as the judge approval process,
Yes.
which means that you really are giving people the most amount of money
Yes.
that you can for what it is that they're able to sell. Now, I understand that the money that they receive with a judgment in their favor is tax-free, and if they choose to purchase a structured settlement with that money from the insurance company, those payments are tax-free as well. What happens now when